Listen up, because the air you're breathing right now is thick with the scent of a world shifting on its axis. We aren't just looking at charts, we're staring into the maw of a calculated chaos. While the talking heads obsess over 5-minute candles, the reality is a jagged blade. Iranian drones just slammed into the US consulate in Dubai and a CIA station in Saudi Arabia. This isn't a drill, it's 50,000 troops, 200 fighter jets, and 2 aircraft carriers staring down a $35,000 drone swarm that costs us millions to intercept. This is the definition of uncertainty. If you're trading with leverage and no exit plan in this environment, you aren't a trader, you're a gambler in a burning casino. The world silver and gold are trading in right now is one where oil hits $78, up 40% since December, and the market just spit in the face of Trump's naval escorts and DFC backstops. The normal we once knew has been replaced by a structural supply risk that no warship can fix. You need to understand that the data, the 6.455 GRACA-1 leverage ratio on registered silver and the $13 Shanghai premium, is the only truth left. Everything else is just noise designed to harvest your hope. Either you own the reality, or the paper illusion owns you. But the tape never lies, and the rapid drain in the physical vaults is telling a story that the headlines are desperately trying to drown out. Look at the tape, and tell me what you see, because what I see is a world on fire, and the smoke is blinding everyone but the elite. Oil hitting $78, up 40% since December, isn't just a price spike, it's a structural heartbeat of a planet in crisis. Trump's announcement of naval escorts and DFC insurance was supposed to be the all-clear signal, but the market rejected it immediately. Price dropped 4.5% on the headline, only to claw back every single dollar within 30 minutes. Why? Because the market knows a warship can't protect an upstream energy infrastructure against $35,000 Iranian drones that cost us millions to intercept. This is the currency war records warned us about, an asymmetric nightmare bleeding the dollar's architecture dry. If you're watching 5-minute candles while the Strait of Hormuz falls under Iranian supervision and Rubio warns of escalating intensity, you aren't trading. You're gambling with a blindfold on. We're staring at a 6.455-1 leverage ratio on silver while the Shanghai premium screams at $13 over Western paper. The paper market is a house of cards and the floor is only holding by a thread of a failed DXY breakout. This is a liquidity squeeze masked as a war, where the monarchies stop recycling oil revenue and the safe haven starts looking like a cage. The algorithms are frantically chasing rumors of a negotiation that Iranian officials have already denied, but the physical drain tells a truth that no fake headline can rewrite. Listen to the heartbeat of the tape. It's erratic, it's violent, and it's telling you the old world order is dead. Trump's naval escorts and DFC insurance were supposed to be the shield, the grand stabilization play to calm the nerves of the West. But the oil market just spat in its face, dropping 4.5% only to reclaim every cent within 30 minutes. This isn't a logistical glitch, it's a structural rejection of the dollar's authority in the Persian Gulf. While Rubio warns of an escalation in scope and intensity, you are witnessing the birth of an asymmetric nightmare where we fire million-dollar interceptors at $35,000 Iranian drones. The math of that exhaustion is why the monarchs are rethinking the recycling of oil wealth into U.S. treasuries. When the Shanghai premium hits $13 over our paper price and the SGE reports a massive drain, the signal is screaming. The West is pricing a hallucination while the East is hoovering up the reality. If you're staring at an hourly candle, you're missing the forest for the burning trees. This is financial warfare as Rickards defined it, a systematic dismantling of the dollar's architecture. We are witnessing the death of normal, where a 6.55:1 leverage ratio on silver isn't just a statistic, it's a fuse lit on a powder keg of global liquidity. Either you own the physical truth, or the paper lie owns you. The headlines will try to sell you a negotiation to keep you calm, but the vault outflows suggest the exits are already being blocked by those who know what's coming. Stop looking at the flashing numbers on your screen and start looking at the vault doors, because the paper world is hallucinating while the physical world is screaming. We are staring into the abyss of a 6.55:1 leverage ratio on registered silver. That means for every real, tangible ounce sitting in a vault, there are 6.5 paper ghosts haunting it, all claiming to be the rightful owner. This isn't a market correction, it's a systemic hunger that cannot be fed by digital digits. On Monday alone, 2,391,000 ounces of silver walked out the door from Brinks, CNT, and Loomis simultaneously. This isn't retail stackers buying coins. This is the sound of the ultimate insiders pulling the ladder up behind them. While you're distracted by fabricated negotiation rumors and a $20 paper move, the Shanghai premium has exploded to a staggering $13. That gap is the funeral dirge of Western price discovery. We are witnessing the financial warfare Rickards warned about, where the very architecture of the dollar is being dismantled by $35,000 drones and a 12% monthly inventory drain. If you're playing this with leverage right now, you aren't a trader, breathe it in. You're a gambler in a casino where the exits are already on fire. The data is telling you that the physical floor is the only reality left, and that floor is shrinking by the hour. The institutions are quietly vacuuming up the remaining physical supply, leaving the retail crowd to fight over digital dust that will never settle. The paper illusion is shattering right before your eyes, and the elite aren't waiting for the credits to roll. They are already scrambling for the lifeboats. Look at the COMEX. The March contract just collapsed into a pile of digital dust, but the entities standing for delivery aren't rolling over quietly. They are demanding their metal, and they want it now. We are staring at a 6.551 leverage ratio on registered silver, a mathematical ghost story where 6.5 frantic claims haunt every single physical ounce left in the vault. While you're being fed headlines about technical difficulties and temporary glitches, institutions like JP Morgan, Wells Fargo, and Bank of America just stopped a combined 146 contracts to pull physical bullion off the exchange. They aren't stacking for a rainy day. They are securing the only reality left in a world of $35,000 drones and failing dollar breakouts. The 12% reduction in total inventory in just 1 month is a siren song for the end of the paper era. If you're trading this environment with leverage, you aren't a trader, breathe it in. You're a gambler in a burning casino, betting on the color of the smoke. The big money has stopped playing the game of price and started playing the game of possession. The herd is being led toward a digital slaughterhouse of forced liquidations, while the silent giants are busy vacuuming up the remaining physical reality. Wake up and smell the desperation. If you're staring at a 5-minute candle while the world burns, you aren't trading, you're being harvested. Right now, there are 2 types of people: those who treat uncertainty as a roadmap, and those who treat it as a death sentence. Since February 9th, retail investors have dumped 15 million ounces of physical silver, thinking they were escaping the fire. But look at the data. The stress indicators didn't even flinch. The machine swallowed those ounces and stayed hungry. This is the psychological warfare Mark Douglas warned about in Trading in the Zone. You aren't losing because your chart is wrong. You're losing because you can't handle a world where fake headlines move oil 4.5% in 30 minutes. While you're panicked by the noise, institutions are watching that 6.55 Clause 1 leverage ratio and the $13 Shanghai premium like hawks. They want you to sell your reality for their paper promises. If you don't have a defined exit and an ironclad plan, you're just exit liquidity for a system that's running out of time. The herd is being conditioned to flee at every ghost on the screen, while the silent giants are busy locking the vault doors behind them. The mask is slipping, and what's underneath is the cold, calculated machinery of financial warfare. As Rickards warned in Currency Wars, the real battlefield isn't just the sand, it's the very architecture of the dollar. We are watching $35,000 drones bleed $1 million interceptors dry, a mathematical death trap designed to drain the treasuries that keep this system breathing. This isn't just about drones, it's about the monarchies that recycle oil revenue into US debt finally seeing the cracks. Look at the DXY. It's a failed breakout, a swing failure pattern that tells you the global trust is fraying at the edges. Capital is fleeing the euro and European bonds, hunting for a home in a storm where even the safe havens look like cages. If you're trading silver with leverage right now, you aren't an investor, you're a ghost in a machine that's already programmed to liquidate you. The 6.55:1 leverage ratio on silver isn't just a stat, it's the heartbeat of a physical reality check that the paper market can no longer suppress. The grand illusion of a stable dollar is evaporating in the heat of the Persian Gulf, leaving only the hard truth of the vault. Zoom out and stare into the abyss of the old world breaking apart. This isn't just a market shift, it's the final verdict on a dying architecture. When Rickards spoke of currency wars, he was describing this exact asymmetric nightmare: $35,000 drones making million-dollar interceptors obsolete, systematically bleeding the treasuries that prop up the global monarchy. The DXY failed its breakout because the world is losing its appetite for paper promises. Capital is fleeing the euro, not out of strength, but out of a desperate search for a shelter that no longer exists. The market's rejection of Trump's naval escorts at $78 oil proves that warships can't fix a structural supply void. If you're obsessing over a $2 paper move while ignoring the $13 Shanghai premium and the $6.55 1 leverage ratio, you are choosing to stay blind in a burning room. This is a liquidity squeeze where cash is king only until the physical vault hits zero. You have to decide now: are you holding a plan, or are you just holding the bag for an elite that's already cashed out? Invest with logic, or the machine will harvest your hope. The final signal won't come from a central bank press release. It is being written right now in the silent, rapid emptying of the world's physical vaults.